Hi everyone! Thank you for having me here today. I am Anna, a FinTech Industry Leader at Intellias. Not the most obvious position here. Let me describe you a little bit of what I actually do. I discover the latest tech trends in the financial industry, analyze where the next big growth opportunity may come up, watch how different automation and digitization projects succeed and unfortunately fail, and preach on just how important and CX-driven approach to banking is. What makes me qualified to do all this thing? I wore many hats over the last decade. Worked as a financial analyst, business analyst, and even did some trading on the side. And that's how I got to Intellias, a place where we enable you with the right knowledge, tech, and resources to build a great new product. And during my research, I happened to work out the optimal formula for a growth-hungry fintech. CX is ML plus UX, and it actually got me the speaking engagement. But before we jump into that, I have a question. Who is the most remarkable, extraordinary app growing on steroids and threatening fintech unicorns? Is it a wealth management app? Is it a new personal finance management tool? No, it's TikTok. You've probably heard all those numbers about TikTok's phenomenal growth over the last 2 years. The most downloaded app, the most engaging app, and so on. What you may have missed amid the TikTok craze is this bit of news. ByteDance, TikTok Chinese parent company, actually wants their Western firstborn to graduate to something more than a random challenge generating machine. They envision TikTok as a super app. What is a super app, yeah? It is a product that combines a bunch of services and allows third-party developers to integrate mini programs inside the main product. In essence, it's your Swish type of army knife of a product that has all the services a user may need, accessible via a single interface. Think anything from payments and banking to doctor's appointments booking or food ordering. All of these programs are tightly interconnected, complementing and reinforcing each other, so that users don't get tempted to switch to another app. Circling back to TikTok, ByteDance already launched a consumer lending app in its home market in late 2019. As the rumor goes, a new fintech product might be on the way for TikTok users. But how can a social media app morph into a financial product? In several steps, of course. First, you start collecting customer data, connections, conversations, geolocation. Next, you plug the data to a strong machine learning core. And finally, you connect the new algorithm to a simple and sleek UX. All of these three things can be bundled into an addictive social media app. The one showing you the content you want 24/7 and progressively learning about your browsing habits and everything in between. And the very same formula, CX is ML plus UX, applies toward financial products. For instance, a digital banking app that uses alternative social data to create a custom credit score and issue a consumer loan within 3 seconds. But does the future of fintech really drift towards the super app model? The data say so. And mature fintech players are already following this consumer-side lead. So why is this happening? Why are we seeing the platformization of fintech? Two words: app fatigue. People are getting tired of being forced to switch from one product to another. And here is the data to prove that. As already hinted, most mature fintechs are onto this abundant trend and actively try to diversify their portfolio of in-app services. They are moving away from being solutions toward becoming platforms. In the other way, a collection of financial and lifestyle services, ranging from wealth management to crypto investing and discounts at retailers, all houses under one roof. Now comes a pinch of salt. As fintech platforms grow more complex and feature heavy, users start complaining about feature or information overload. Guess what? That is the exact same reason why most digits are incumbent bank for intuitive fintech apps in the first place. And herein lies the big problem fintech now needs to solve. How do you build a technologically advanced financial product without making it too complex? Because let's be honest, my friend Kata doesn't want to estimate her predictive net worth using 5 different formulas. She just wants to know if she can ever afford to purchase a flat in Paris and what mortgage rate she can get. But then, my mate Pete is really into trading and he wants to get personalized robo advice for a portfolio of stocks, bonds, and crypto assets. So, how do you align your product with such different customer journeys? How do you make your financial product as engaging as TikTok without making it as complex and notorious as Night Capital Power Pack algorithm? Offering less with more is the new challenge for mature fintechs. How do you solve it? My answer is by applying this formula. Customer experience is machine learning plus user experience. Customer experience is a buzzword, right? I bet you already heard someone saying CX at least 1,000 times during this day. So rather than giving you regular definition, I will share a quick story instead. Today we have millennial consumers, the folks holding the largest buying power and by 2030 also the largest fraction of disposable wealth, thanks to their inheritance from boomers. If you spend at least a minute online, you know all the labels the generation gets. The self-absorbed and selfish folks, who are also guilty of self-care and don't mind spending a few dollars here and there on a fine meal or a super promo. And somehow, most of us, the millennials, end up with enough money for an avocado toast, but too little for a real vacation or ever setting foot on the home ownership ladder. Anyone can relate? As a millennial myself, I usually do not agree with those stereotypes. But when it comes to banking, I become that self absorbed person. Because here is the thing most of the time, I don't look for specific banking products. I'm on the watch out for some solution to fulfill my selfish at the moment needs. For example, find a way to save for a trip abroad, stash some money for my wedding, or just assess if I could ever afford a house of my dreams. My customer journey is strongly aligned with my life journey. However, when it comes to product development, most fintechs work from the opposite angle. Instead of trying to match their product with the user's actual needs, a lot of product owners build their customer journeys around products in their portfolio. And the story goes like this. Look, a retailer offers us to launch a co-branded credit card together. Cool bean, let's do it. When in reality, your product development story should go like this. Okay, so a lot of our users shop at Store X. Can we offer them a rebate? An instant consumer loan? Can we do a joint ads campaign or launch a co-branded credit card? As fintechs settle for the fast portfolio-centered approach, most customers don't get those sweet "what's in it for me" offers. Instead, they are pursued with irrelevant upsells. But most of your customers want to feel special during all stages of the banking journey. The best part? You already have all the keys to make that happen. As a fintech, you're already sitting on a data goldmine that describes your customers' spending preferences, transaction data, and indicates their current life stage, age, social data, spending. What you need now is to release the data from product silos. Doing so can help you step away from managing account towards offering a truly personalized experience for each customer. Right, but how do I figure out what my customers need? First, use the data you have. Second, design machine learning algorithm to crunch it for you. And third, receive next best action suggestions. Here is how such NBA systems work. One of your customers, Linda, booked a flight to Mallorca in 6 months, but her savings account is nearly empty. So what does Linda need? First, some good budgeting advice and features to help her curb her spending. Secondly, a co-branded credit card that can help her collect hotel points. She has a good credit standing already, just in case you are worried. How do you find such Lindas among hundreds of thousands of customers in your CRM? With the help of predictive banking analytics and propensity models. The current state of ML lets you determine micro customer segments and pitch them ultra-personalized offer in near real time. By using your data sets, such algorithms can tell you what to sell, when to sell that product, and when doing nothing is the best option. That is how you keep your customers engaged at scale. And here are a few more other ways how the NBA concept can be used in fintech. Deliver hyper-personalized offers, services, and rewards to individual customers. Using predictive analytics, fintech company can create dynamic personas and target users with relevant deals based on their spending data, location, common purchasing behaviors, and past responses to campaign. You can deliver such features as in-app messages, app notification, or as personalized advice from an in-app AI assistant. Improve cross-sells, upsells, and product recommendation. Your AI-powered system can help you map the correct product with the most likely buyer. Plus, predict which financial service your customer will likely need or buy next. Such predictive powers help you deliver superior customer experience. After all, by knowing what your customer is up to next, going abroad, buying a house, having kids, your teams can facilitate that person on their journey and help them meet their goals faster. What's more, you can also dynamically track and review previous offers to avoid pitching the same product to the same users over and over again, and annoying the heck out of them in between. Morgan Stanley has recently launched Wealth Desk, a next best action wealth management platform for their advisors. In essence, it's their advisor's second AI brain, whispering them all the right moves. Here is how Wealth Desk supports their teams. First, provides real-time advice for clients based on their life events. For example, if a client has a child with an illness, the system could recommend the best local healthcare options, schools, and financial strategies for managing the illness. Sends personalized, real-time updates to advisors, such as low cash balance alert, notification about major increases or decreases in clients' portfolio, and so on. This allows the Morgan Stanley team to respond faster and more effectively to various events on their customers' journey. Offers more traditional robo-advising. The system collects recommendations and insights for clients and suggests them to advisors so that they could advise better. To get a step ahead, fintechs can also adopt similar NBA solution, but use conversational AI interfaces instead of financial advisors to build that kind of personalized rapport with each customer and offer them optimal advice. And that's where the true power of machine learning for customer experience management lies. Now, let's move on to the second element of our formula, user experience. Here is some uncomfortable truth. Millennials' financial literacy isn't great. There are two things millennials struggle with most: understanding financial risk and risk management, and figuring out insurance. And there is some connection here, right? And this is a big deal because risk and uncertainty are wired into most financial decision making. Could anyone predict the recent drops in stocks back in November? Nope. Do we have any idea about where the commercial real estate market is going? Not much. And while those two are complex questions, most users also need support with simple things. Can I afford this purchase? What happens if I invest in this stock? Good financial products must educate their users. But how do you teach folks who don't want to be preached about the importance of the boring financial stuff such as budgeting, FTPs, or mutual fund? You make your product highly intuitive and incorporate progressive discovery and learning. Borrowing a page from SaaS companies, you need to build a smooth funnel for moving your people from being financial beginners to regulars and then product champions and likely brand ambassadors. And you do so by creating a streamlined and effective user experience flow within your product. So, what's the anatomy of effective user experience for a fintech product? Let's break it down together. Most people use financial apps daily. Clearly, your customers want fast access to their money and all the features for managing it. Of course, you don't want to stand in their way. But remember, there is also security. You can't let just anyone in. The best way to secure account access is to use biometric solution. Touch ID, Face ID, Voice ID. You can use this to grant access to your core account features. Plus, you can pair biometric with multi-step authentication for more sensitive actions, such as changing card withdrawal limits or making large transfers. Monzo, for instance, allows users to authorize P2P transfers with a fingerprint, but relies on advanced verification for bank transfers. Getting signed up for your product should not require a finance degree or take 14 plus day and at least 3 post office runs. And that's for the digital account opening. Your goal is to make the onboarding process a delightful conversation, not a daunting routine. Being a mobile solution gives you plenty of advantages. A camera to capture ID documents, biometrics collections, social media data, location-based services. But don't go all giddy and grab all the data you can. Request only the information you need to verify new customers so that they can quickly get access to their account, and then you can progressively open up access to additional services as a new customer performs various actions in your app and raise their transformation score. As well, you can add extra KYC procedure for more sensitive operations such as trading, lending, to stay on top of compliance. Here is how my bank, part of Ant Financial and the Super App, employs all the latest tech in their 310 approach to loan application. They have 3 minutes application process for all new customers. Instead of asking for direct input, my bank sync most of the customer data from other profile they have within the Ant Financial ecosystem. Approval for a consumer loan take 1 second, and all of this happens with zero manual back-office operations. Machine learning, algorithm, and predictive analytics take care of those. Your goal is to get people using your product as fast as possible, so that they can move from a novice to regular users, then develop a sticky habit, and eventually become loyal adepts who raise your company's bottom lines. That's why getting a debit or credit card post-verification should take just a few steps. Square Cash is a great example of how that's done. Next, your users should not waste brain power on figuring out the state of their finances. All the key data should be available at a glance. Revolut does a pretty good job within its main screen. Their app offers progressive, the one-tap discovery of key insights. Plus, you can seamlessly navigate to additional features such as top-ups in a few taps. If you want to get an edge, you can also introduce a more advanced analytic dashboard that shows users how they are doing in terms of meeting their financial goals. If they are on top of their saving, for example, you might suggest portfolio allocation or send other personalized wealth management advice. SoFi nicely pack all key insights into one neat interface. Finally, don't forget about educating your user about their account options and personal finances. But don't be too pushy. Your goal is to show and tell, not preach. Acorn is one of the few fintech apps that offers nice stream of educational content together with CNBC. This may sound counterintuitive, but bear with me for a second. PayPal, Venmo, and the like set the bar for quick and easy payments. Borrowing a Messenger UI to design a similarly smooth money transfer or account top-up experience is a good idea. But a zero-friction UX can do more harm than good in fintech products. Money matter, after all, a serious business. No one wants to accidentally send $1,000 to some spam contact just because doing so was seamless and hassle-free. Am I right? That's why it's important to add some intentional friction whenever the user wants to make any major in-app actions or permanent account changes. Think confirmation of pop-ups, two-factor authentication, and other minor roadblocks that prevent people from taking their own actions. Balancing a smooth experience and necessary friction is essential for fintech products. The next logical question is, how do you reconcile that shining front end with all your middle office and back office operations, plus sprinkle that machine learning on top? To accomplish that, you will need to organize your product at 6 different levels. Let's go on a quick journey with Carol, our millennial protagonist and a loyal bank customer. First, you will need to learn about her habits, what she earns, what she spends on, and where she invests. All of this data needs to be stored in a secure data lake, the place where machine learning algorithms will go fish for data. Setting up a data lake platform is the first step towards predictive analytics and ML, aka your analytics layer. That's how you gauge that Carol falls into a customer segment A and will likely respond well to product A, B, but not C. Whenever Carol goes browsing for a new credit card, her action triggers the marketing operation layer. Automatically, she receives a series of personalized in-app messages encouraging her to look more into product A and B. A few days later, Carol is ready to sign up for a new credit card. Your analytics layer already marked her as a good candidate, so she begins her journey to digital onboarding and gets approval for a new card in 3 seconds. Now she just needs to e-sign some documents and choose her card design. Carol's been enjoying her card for 6 months now. She always pays off her balance on time and her credit score remains high. One day, however, your analytics-driven interaction layer noticed that Carol didn't get her paycheck on time. You auto send a quick reminder about late credit card fees and, to reward her loyalty, offer to waive a late payment fee for 1 month. Carol is pumped and accepts the deal, but she also wants to learn more about her credit card fees. That's where your customer service layer comes into play. First, Carol hops to relevant self-help resources. Afterward, she uses a chatbot to get some more info and then requests help from a support agent who already has all the information about her prior queries. Eventually, the custom support agent offers her an even better credit card product and helps her transition. Carol remains a loyal and profitable bank user for another 5 years. By creating a strong alignment between these 6 layers, you can cook the ideal customer experience for fintech product. Let's sum things up. Excellent customer experience is a strong differentiator between traditional banks and fintech products. But as your product becomes more mature, featuring a larger portfolio of in-app services, it becomes more challenging to maintain that simple and intuitive flair. Machine learning can help you get that bar high, as it allows you to delight users with ultra-personalized deals and suggestions relevant to their current life stage. An effective UX prompts new users to progressively discover new apps, features, and products without feeling overwhelmed, while advanced type can also enjoy access to more sophisticated functionality. And that's how you align your product development with customers' journeys similar to Carol's, Linda's, and many other millennials consumers looking for their next primary financial product. I hope you enjoyed this presentation and got some new insights for your product development. And don't be a stranger. Let's connect on LinkedIn or Medium. That's where I mostly share the good stuff. Or you can just shoot me a quick email to start the conversation. And thanks a lot for coming to my talk. Have a lovely end of the day and stay customer friendly.